Hello and welcome to another update video about ADA. Yeah, really painful price action to watch across the sector, really. There are a few exceptions, but most of these coins are really painful to watch at the moment. Just super boring and nothing exciting there. And I mean, price action to the downside looks corrective. I mean, that's great. That would emphasize or at least support the idea that we could see further upside continuation once this correction is over, of course, but that indicates that we could indeed be in a corrective pullback that would then, lead to trend continuation higher in ideally what I have labeled as a C wave to the upside. That would be a 5-wave pattern to the upside and could still reach the 85 to 96 cent range. We might need to specify those targets further or move them a little bit as soon as we have a low in place in circle B, because then I can calculate the target for circle C to the upside a little bit more precisely. So, but for now, I mean, we're moving still in what I would consider a corrective pullback in wave B in the primary scenario. The support levels are 55.7 and 50.5 cents, the next one. Once in yesterday's video, I shared with you that it's likely that we're testing 55.7 cents next. Again, that happened, but there hasn't been substantial reaction to indicate that the next move up is starting. No, absolutely not. I think a C wave down could still unfold, but we need to see if it stays, if the price stays within the wedge or breaks to the downside. Wouldn't be a disaster to break to the downside, but would obviously indicate weakness. In the next support level would then be 50.5 cents. So you see how the market is respecting here these parameters, the 55.7 cent level, which is the golden ratio level, and really a key support level. In Elliott wave, really, or in technical analysis, the golden ratio. I mean, it's really a key level that was touched. The price showed a reaction, but really small volatility, low volatility. And we're moving in what you could consider a descending wedge pattern. I mean, I've labeled it as a WXY pattern. I'm sure there are other interpretations that could easily apply here. I mean, there are so many options that could apply here. Because bear in mind, we're moving in a correction that already allows for multiple interpretations. And then in the larger, looking at the bigger picture, there's just so much, there's so many issues here, like an unclear bottoming structure. I mean, on some charts, the actual lowest point, I think, is September. Here on the Binance chart, however, it is June, so I go with that one. But if I have the low here in September, then I have a completely different count. So that's one issue. Just different issues, and then this corrective pullback. We're dealing with a diagonal as well, not an impulse, because we're dealing with a diagonal. That in itself allows for different interpretations. So yeah, it's difficult. It's not an easy chart. Still, it somewhat seems to respect the parameters. And if we break below 50.5 cents, I can't really go with the white count anymore. In the white scenario, obviously, as I said, one more high seems likely, seems plausible. But in the green count, that would be the alternative. We are already in a larger wave 2 correction. Would also be potentially a bullish scenario, but allow for a deeper pullback before a low is formed. That would be wave 2 in green. And in the green count, I mean, in the wave 2 pullback, we basically would be in the late stages possibly of the A wave in green. And then instead of a breakout to the upside, as shown in white in this C wave rally, we could just get a B wave. And the B wave would be a 3-wave move. So if the next rally stops after 3 waves, it's like the green count. And then we come down in wave C and could add a support zone here somewhere for a 3rd wave rally, and to prepare there for a 3rd wave rally, look possibly for entries. Yeah, I think at the moment there is a potential for one more high. I think the much better setup will be the 1-2 setup. Either it's coming down now, okay, and then we can define that, or after this wave 1 is completed, then the wave 2 pullback, and then the 3rd wave. Assuming we are then still in the bull market, which ideally we should be. So yeah, there isn't much more to say really. I mean, 50.5 and 55.7 cents are the next support levels. Then we have some structural support here around 44.7 cents. Also pay attention possibly here to this trend line. It's obviously sort of here just a parallel trend line to this trend channel that goes through the wave 2 low. So just something to be aware of. I would need to adjust that. But there's a trend line that would go through here as well. So roughly like that, yeah. It's just not an ideal trend line. It's just because it's a trend channel, an Elliott wave channel. So there might be a reaction, there might not be. But the fib levels have to be considered, and you know, they are still holding, and the decline sort of in terms of downside momentum seems to slow down as well, and wedges often break to the upside. So it's something still to watch and observe, but of course it is very, yeah, it's very boring, unfortunately. So yeah, not much more to add. So hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.